All right, so yeah, just gonna give it a couple more minutes, let people trickle in. Hopefully, y'all had a fantastic weekend. I know I did. The sun is finally out here in Vancouver, and I don't know. Hopefully, it stays. There was like one random day, I think on Friday, that was just at night it was rained crazy. But yeah, now here we are. Here we are with the quantitative team, looking for another exciting week. Show of hands, who did really well last week? You can ignore my laundry here. It gets cold sometimes in the office, but yeah, who had a really good week last week? Who had an okay week? Yeah, ponage method. There you go. That's what I like to see, man. So I know last week it was an interesting week. I'll say that for sure. There was definitely mixed performance. Bryan is here. Sergio, what's up, man? Yeah, mixed performance from a lot of us, and definitely want to echo a few things about sticking true to your stops, sticking true to holding through some turmoil. If you really believe in a move upwards, I'm going to give it another couple more minutes, and then I'm going to go ahead and actually get started here. But for those of you guys that participated last week, hopefully you guys are focused on always journaling those trades, right? I find that a lot of the unsuccessful traders that think they're trading when really they're just participating, they don't actually journal their experience, right? And I know I've spoken so much on this, and it's because I really believe in it. If you aren't actually writing down your losers and your winners, how those losers happened, how those winners happened, what are you really doing in the market? Are you trading at a high level? Do you think that if you were to hire someone to manage your money and they don't know their past performance and what environment of the market they do well in, do you think you would hire that guy? Would you be happy with that guy? I wouldn't be. I wouldn't be happy with ABJ doing that, throwing my money into the market for no reason. All right, cool. So yeah, my good friend Bryan is here. I'm going to ask him some questions later during the last half of the session. Again, I don't have too much to go over today. We still have a little bit of earnings, so let's go ahead and get started. So for those of you guys that are brand new, this is Quantitative's Q&A market prep. We run these every Wednesdays, every Sunday, 5 p.m. PST. And we run these for you guys so we can all be prepared together and we can learn a little bit about quantitative and learn about a little bit about data-driven trading, right? You guys know how I perform in the market. I do all right, and I'm just intermediate, right? So this is your time too. For any questions that you may have, you're welcome to ask them. I'll make sure to leave a little bit of time in the end for questions, but I do want to bring on our guest speaker as well because we got questions for him, and he's someone that I think a lot of you guys have seen in the channel already. So without further ado, I'm going to go ahead and get started. So we have, first of all, what news do we have this week? I've been using the Forex Factory a little bit more as of late, but what happened here? I used to have this filtered for US only. Let me filter this again. I ain't that interested in everything else here. All right. So what do we have Monday? ISM surfaces PMI. So that's 30 minutes into the market session. So I'll tell you right now, Monday and Tuesday is probably not going to have a lot. It's probably not going to have a lot of anything crazy. We might get a surprise trend, or we might get chop, because I honestly don't think any of this really matters except for this one right here. So what do we see here? FOMC press statement, right? This is going to be, it's going to be a really important one, right? We know Trump has said a lot of words in regards to Powell. We're going to see how he reacts. I feel like Powell's been pretty good at dodging most of the remarks that the reporters get to him, but nevertheless, how he responds and the rate decision is going to be really important to see if this move up that we've had in the market, right? Like we have been moving. We'll have to see if this holds. If any of this is like if this is just a one-off, right? Because Wednesday, there's a lot of room to go, like in both directions, right? We can come back up here. I've marked this level as like right here. This is your November 6th levels. If we can get back to this area, that'd be really fantastic. This is when Trump won, or we don't, and there's a lot more room that we've traveled from. Like this here, this bottom that we've made from 4,800 low all the way back up to 5,600. This is a silly move, but only in a Trump presidency, right? Only in a Trump presidency do we see this stuff. But this is a possibility, like right here, if things go okay. Now, I don't have a crystal ball. We know that FOMC and any sort of 3-star events does trump Delta and Gamma and Vanna, all the Greeks that we like to see. But I'll be paying very close attention to how this Monday and Tuesday play out. I want to see if there's any large calls and large puts being plugged into the market. Like let's say the last time we had a really, really amazing FOMC, it was March 2024, I believe. March 2024, where we just saw like, $800 million in calls, naked calls just flow into the market. That was just a huge tell. Do we see that again this time? Because this FOMC is kind of important. I don't know. I'm not sure yet. But what I do know is that Monday and Tuesday aren't really going to matter. I know there's a 10-year bond auction. Normally this matters. I doubt it. I doubt it. So after FOMC, we have one day where we have a little bit more news. Unemployment claims, that's pre-market. This is going to affect market for sure. 30-year bond auction, that's way bigger than the 10-year, so this is going to be really important. And then we have Friday. So Friday we have a lot of speakers, like basically throughout the entire day. So because of that, I wouldn't really say that it's... I really wouldn't say that it is a digestion Friday. I know some of us would still consider it, but I think there's just way too many speakers to consider. I think everyone, that all day, we're all going to be focused on the words that come out of these guys. We're probably all going to be listening to Financial Juice and just seeing like if there's anything crazy that they say. A couple guys that we've been paying a lot of attention to, right? Bar. This is AM though, so this isn't. This is pre-market. During the market though, we have Goolsby. We pay attention to this guy. Williams and Waller. These two have been pretty loud. Is that the right word to use? They've just been very vocal about their opinions right now about everything. So, Tipped here saying 96% right now of a rate cut probability. That's pretty impressive. We'll see. We'll see. They're usually not wrong, but we'll see. I feel. Oh, sorry, no rate cut. I feel like. There's a lot of pressure from like both sides, so we'll see. We'll really have to see. I'm not gonna hold my breath yet. We'll see how Monday and Tuesday go. So that's what we have. But regardless of FOMC, what else do we have in the horizon? We have earnings. A lot of earnings. I know there's a bunch of us focused on this one here. Good old Palantir. Right? Who here is invested in Palantir? Who has a position in Palantir? I think you guys know I do. But who here has a position in Palantir? Obviously, it was the stock of 2024 as named by Barron's. So I think there's a lot of eyes on Palantir. I think Palantir could lead. But aside from Palantir, there's things like Supermicro, AMD, these two. A lot of eyes on AMD as well to see if AMD can, recover from whatever damage has been incurring. Another very interesting one is UPST. We've traded UPST before. This is one that sometimes gets really obvious flow. So if you all of a sudden start seeing 7 million, 10 million, last time we saw $15 million, like an hour before earnings. So literally power hour, we saw $15 million worth of calls going to Upstart. And well, that kind of just told the story. So if you are interested in taking one of these earnings trades, definitely pay very close attention to see if you see any individual orders that really pique your interest, right? The main thing we're trying to do with the flow is look for confidence. What does confidence look like to you, right? If you understand the options market, a couple things that I like to personally look for is out of the money. If someone's willing to take on the theta risk of buying out of the money and see if they're looking to get some sort of gamma bloom into profit, that would be something that I'm looking for. Large sizing, that's out of the ordinary. Golden sweeps, we love seeing golden sweeps on some trades. Sometimes that's the tell. So yeah, a couple of those with a little bit of market sentiment. Maybe we have a really good move. Uber, Disney, those are some other ones that might be interesting. And then I'm actually very interested in Coinbase. So I have a bunch of positions on Coinbase, sold puts that, who knows, maybe we have to get an opportunity to sell a little bit more. I know Mara is going to be interesting as well for a lot of crypto traders. So yeah, for myself, Palantir, Coinbase, and Mara, those are the ones that I'm interested in. These ones I'll keep an eye on. SMCI, AMD, Upstart, keep an eye on them, but I'm not going to plug anything in that I don't fully believe in. But yeah, I know last week we had Amazon, we had Apple, right? We saw Thursday at the close, market just kind of flushed. It kind of seemed like someone already knew that those earnings were not going to be too hot. And then what happened on Friday, right? We pumped right back up. So I'm going to go into the data now. Before I go into the data, I wanted to bring up this too. So I know we look at this every morning, right? At least I do. On Friday, we were actually hovering into the neutral territory. So that was a really good outlook for the market, right? Neutral kind of tells us like, oh wow, we came all the way back up from fear. We came all the way back up from extreme fear territory. Right, extreme fear territory. Now, and then from there we came all the way back to neutral, and now we're kind of hovering right around fear. This is pretty close. So I think after FOMC, we should either be back into like fully fear zone, or we might be back into like greed. That would be really interesting to see. Obviously, greed is really close. Generally, I've used this a lot, but generally, from what I've seen, is that anytime we come above the 125 SMA on the daily, CNN starts to say like, okay, we're kind of back at it. So that's going to be really interesting. And so I'm going to keep an eye on this every morning. So I obviously every morning and every day at close, I'm keeping an eye on this. I pop this open to see, okay, what is the general emotion that's driving the market? Are we looking for risk on, risk off? Are we back up to highs? What's the breadth? What's the volatility looking like? Right, so that's just me. So I'll share this with you guys really quick. This is all free. Provided by CNN, our favorite news source, or one of them. So yeah, let's go into the data. So I want to go over Thursday first, because Friday was really interesting. Friday was a really good day, obviously. And I think Friday, though, Thursday threw a lot of us off because of that flush at the end. But Friday would have been a day to be like, wow, I know what I'm doing. Let's take a look here, Thursday. We're going back to Thursday here. Right, so this is the Thursday. This is what happened at the end of the day. Just a straight flush down. But I really kind of, hindsight 2020, I kind of attest this to earnings coming up. People wanted to de-risk because they maybe knew Apple and Amazon was going to do too hot, right? So this is the open of the day on Thursday, May 1st, right? So Thursday. So what do we see first of all? What's our first general idea? So obviously the net drift wasn't fully developed yet. We had a little bit of a chop all the way until our magic point here. 7:30 a.m. the first hour of the market. That's generally what I like to do. A lot of times the trades I take before, you know, not the best, but based on my journal and my performance, like an hour after the market is when I actually do the absolute best. Most of my money comes from after the first hour of the market. But what do we see here? Right, so we had a little bit of a net drift crossover on the call side. Right, 10:30. No worries. I'll show you really quick. This is earnings whisper. Mag 7 for whatever reason had just calls surpass puts by quite a large margin, right? We had about 71, not about, but we have $71 million worth of calls, minus 10 million in puts. Right, that's pretty significant on this, but on the SPX 0 DTEs, we didn't have that. We had a lot of mismatch. Like you can actually see here in the volume too. Like it was just a big mess. But the general idea for the open was that we should see some sort of bullishness, right? And so I want to preface this by saying like the data it gives you an idea of where the most likely scenario for price is going to go. It doesn't always fall through because I always see people go like, oh, data was pointing this way, but then something happened and you know, I wasn't able to manage my risk and then we blew up a little bit. Well, remember, it's still up to you to manage your own positions, and this data is dynamic, right? So this changes as time goes on, as new orders come in to fulfill the market, right? So that's what I want to show you. And so when we move on a little further here, so let's go to that 7:30 mark, which is what we really like to see. So 7:30 is right around here. Right, so what do we kind of see? We still see a lot of long deltas behind us. 55.75, that's a large support. 5,600, right? We never lost 5,600. I mean, at the end of the day, we kind of did by a smidgen there. But what do we see? Targets are for 5,650, right? We kind of surpassed it a little bit, right? You see it for yourself. 5,650 at 7:30 a.m. When did we hit 5,650? Right, you guys were all looking at the same thing. So we hit it at 8:18. 8:01 is what I see. So from 8:01, we surpassed it a little bit. We started to see 5,700. Now this is actually what I want to show you guys. So we start seeing 5,700 on gamma side, right? This was huge. This was a huge point of interest here. Now, we didn't get there, obviously. We got kind of close. We started to juice up towards 56, 58. And then we just made a huge reversal. Now, I couldn't tell you why this happened because based on news, I couldn't see anything that happened in the news either. What we did start to see was calls started to dwindle. They started to sell off. So you can see here, at this point, if you take your mouse and you hover through it, you can see that calls are at 3.94 million. Puts are 500K. It goes up to 4, and then we start to really slide. So calls start to really give up here. You guys see that? And puts start to surpass. Right, so I've been doing a little bit of testing, and I've been marking it as 1 milli. So anytime calls or puts change by $1 million, it might be a sentiment change. And again, we can't really say if there was any news that affected this or if anything changed. Right? But what I can say is that 5,700, we saw that level on Thursday. And what happened afterwards? What happened after this flush? We continue to flush, right? But if you had this level marked for Thursday, if you got into the Friday, what was the top of the market? And I posted it in the chat. What was the top of the market on Friday? Let me move this stuff over. We see right here. Right here. right? So it just looked like they rolled it over. Like whatever happened Thursday didn't work out, but we still keep those levels, and we were dynamic, right? We were dynamic with our movement and price. So we all of a sudden we start seeing 5,700 for this day on Friday. Are we getting a flush? Are we getting $1 million of difference in calls and puts? That's changed, right? So at this point, 7:30, right? We have 2 million in calls. Do we ever lose $1 million? Does it ever go below 1 million? No. No, it does not. It actually just continues going, right? And then at some point, we really do meet 5,700. The top of that day was 5,770. Right? You guys see that? Right here. Right? So that's just you staying diligent, following the data. Remember, again, I really want to stress this. Our first question that we ask ourselves is what's the most likely scenario for price based on what we're seeing? On Thursday, yes, it didn't really help us. Thursday was an anomaly. People started to sell things off. But on Friday, it didn't happen because most of the time we can trust that we're going to meet the obligations of Gamma. So what we saw on Thursday was, okay, 57 didn't happen. So they rolled it forward in time, right? The exposures were rolled forward. And now 5,700 is for Friday expiry. And then we hit it like on the nose. Right, so hopefully you guys kind of understand how to manage yourselves that way. I think that the more you stick true to following a data-driven approach, the more you'll understand this stuff. And the more that you can understand, the obligations of Gamma. This is how I trade. I do very well doing it this way. There was one question, though, in the chat on Friday that someone was asking, oh, why wouldn't you sell? Like, if you see 5,700 as the top, why didn't we sell call credit spreads, right? I know some of you guys that follow me in the chat know exactly why we didn't sell call credit spreads and why I didn't short. One was I was actually already done. I already met my target by a lot. I think I showed you guys my profits for that day. It was well more than, just quite a bit. It was quite a bit more than normal. But we didn't have much time left in the day, right? So the general MVC pivot rule that I like to do is I like to sell 20 points, right? That was based on the study, the 82% pivot, 82% pivot and hold of the MVC. If you were to sell according to the trade strategy that I've introduced to you guys, and you're selling 20 points away from MVC, at the time when we hit 5,700, IV was already dwindled from 39% from the day all the way down to 31%. So we already had IV contraction, right? And if we understand IV, we know that, let me bring up this picture here. Where is it? Right here. IV is the only thing that mean reverts, right? So IV already dropped from 39 to 31. If you were to sell contracts at 31 when it's already dropped so much, you might experience the opposite end of it, where IV might actually expand. And then we start to, be holding those call credit spreads while they're bloomed in premium. When I saw that if you were to sell 57.20 into the market as soon as we hit 5,700, you could only get like 20 cents for a 5-wide spread. Right, so you're risking $500 for 20 bucks on that call credit spread. Is that something we like to normally do here at Quant Data Boys? Do we risk $500 to make $20 here? What is the bare minimum that you need for that trade structure to work? Who knows? Someone knows. 10%. And 10% is the bare minimum. So that's like you getting the absolute bare minimum for the trade, right? So we would have needed to see at least 0.5. So $50 on that 500 wide. Sorry, 5 wide, which means you're putting up $500 worth of risk. Why is that? Again, is because if you don't collect at least $50, you will never roll it. It will be impossible for you to roll. You'll have to roll it 2 to 3 times to make that trade profitable in the future. That's just a waste of capital, right? If we're already we're already benefiting from the fact that we're able to trade actively every day, right? At least I am, and if you guys are here every day with me as well, you have that benefit as well. So why would you risk $500 of capital to make $20? That's a lot of risk. I don't know if we're just trying to make lunch money here. That's definitely not what I'm trying to do. So, I know I'm just answering this because I got that question like 3 or 4 times from 4 different people. It's just manage your risk accordingly. I don't like to take on risk like that. And so, that's it. So I know there's a couple questions in the chat. Let me answer them first, and then I'll bring up my good friend Bryan there. Resource, I just sent that. C here asking, can you pull up QQQ instead? Do you only trade SPX option, or why are you showing us SPX? So a couple things. SPX is the main ticker because it has most of the volume. So if you're ever looking for a sentiment of the market, what's the ticker that you look at on options side? It's SPX because it receives most of the premium, right? And I can show you what I mean by that. It receives most of the premium in the market. Where is it? I think it's heat map study, contract gainers and losers. Look at that. So here you go. So what do we see on the May 2nd? So $5 billion worth of calls were exchanged, $5 billion worth of puts. What's the next one? SPY. It's 1. And then it's Tesla. Tesla surpassed QQQ. So if we're looking for strength and we're looking for overall direction in the market, we should be following where the money's going. And we know SPX moves the market, right? All the money that goes into SPX, if everyone's buying calls on SPX, you know there's no point in looking at anything else. You could buy calls on anything, right? We often echo what we hear from Warren Buffett, right? I know he just retired, but rising tide lifts all boats and a tsunami sinks all boats, right? That is very true in the market. So we've seen it before, where if everything is going, if SPX is going, if everything is rising, everything actually does rise. You could actually buy any stock. You could go and buy Grindr. It doesn't even matter. If the whole market's rallying, the whole market's rallying, right? That's the funds, looking for individual strength everywhere and just buying it up. And then if everything's tanking, well, what happens? Everything's tanking. Like everything goes along with the boat. So that's why I look at SPX a lot. SPX also helps us trade futures a lot. So I only trade ES. I refuse to trade NQ. It's a little bit crazy. And I know that in the end, SPX kind of leads in the New York market. If you ever wanted a debate about that, I often ask, let you guys do the homework on this. If you go on the New York session only, which asset gets more money? Which asset gets more money? Options or futures? I don't know. And once you find that out, then you'll know what you should be looking for if you're trading the New York market, right? Last question. Can you go over the filters used for net drift? I made a post about that already on Twitter. You're welcome to grab that because I think I want to spend the time talking to Bryan, my good friend Bryan here, because I think he has a lot that he can say. If you can't find that post, Miss T, let me know. I'll send it to you later, or I'll try to find it myself. It's not that far in my Twitter post, but let's bring up Bryan, man. Bryan, are you here? Quick look at Bryan there. Yeah, so hopefully you guys learned a lot. Hopefully you guys do see what I'm talking about. Hopefully you guys are ready to take on the market next week with me. I think next week could be a ripper week. It could be.
Hey, Apple.
Yo, Bryan, how are you, man?
Good. Glad to be on stage. It's been a while.
Yeah, it has been. So what's new with you? Really quickly. How are things?
Good. Working on a lot of projects, side projects, work projects, very exciting. So, I think this has been the busiest my life has ever been, but yeah, like I haven't been trading as much, but that doesn't mean I haven't been thinking about trading. There's a lot of stuff I'm working on related to trading, so that's very, very exciting. Work never stops. There ain't no rest for the wicked.
That's right, man. That's right. It's that thing I was just talking about last week, where people were talking about making a robot trade for me so I can sleep. Let me tell you, successful people don't sleep that much, man. We don't. That's right. Money never sleeps. Neither do successful people. So it's a blessing that we're able to work on those things. I'm happy for you, Bryan. But let me go over this really quick. Bryan and I met on another subject, after hours. I know there's a whole scandal about it. We're not going to go over it here today, but Bryan was a great guy there. I posted a lot there, and then he saw that I had a mentorship open. He signed up, quickly picked him up because I thought that a lot of his words echoed a lot of the feelings that I had early on when I was trading. And so he took on trading at a higher level, the ABJ way. And so, yeah, Bryan, how'd you get started? How'd you find quant in the end? Aside from me, but how do you like quant? How did you get started and how do you like quant? That's what I'll say.
Oh man, yeah. It's a story I haven't told in a while, I guess. Started trading last year in February and went through the typical trading journey that many people experience, the ups and downs and the roller coasters and the excitement of learning options trading and all of that. Made a lot of money during the time when you could just buy NVIDIA calls, wake up and do the same thing again, rinse and repeat. And then lost a lot of money when things started to not go my way and yen carry trade and all of that. But in October, was actually in September, I downloaded After Hour. And at the time, I do think at the time it was a good move for me. After Hour, I've learned is maybe I won't put too heavy of an opinion on it right now, but it's not in the greatest spot, I would say. But at the time in September, I think it was a good place for me to open my mind to other trading strategies and styles, and I came across. I believe, so I heard of quant data actually from a Discord server I previously joined already, but I also started seeing ABJ post a lot on After Hours. And I was like, hey, look at this data-based, and by trade I'm an engineer, computer science degree, and all that jazz. So I wouldn't say I have an affinity for numbers, but numbers do ground me in reality, and I would consider myself a fairly grounded person, a fairly data-based. I like logic. I like making decisions with strong reasons. And game theory, if anyone's ever studied game theory, it's a profound. Once you dive deeper into game theory, it's a profound way to look at life, because life really is just a set of decisions. But how do you make the best EV decisions for yourself or in these high stakes environments like stocks trading or options trading? Well, you need data. Like you can't, if you're making decisions blindly without data and just drawing lines on a chart, it's like, yes, as humans, we love patterns. We love looking for, we're really good at recognizing patterns, but that also works against us in the stock market, because it doesn't necessarily, these patterns, even if they do exist, they are so complex. There is so much data that with the human brain and the human eye and the speed at which you can compute things, you just will not be able to recognize patterns efficiently and effectively enough to have a successful win rate over the long run. And that's where quant data came in for me. It visualizes all this data in like this immense amount of data in very helpful ways where, you can actually see, you could still call it patterns, I guess, the ABJ trifecta. But it's in a much more effective visualization. And it's also straight from the source, right? It's got all the options order flow digested and re-represented in the Greeks. And we used a Black-Scholes-Merton model to model options prices or price options. And then there's also the Bjerkson-Stensland model that's also used by Robinhood it's similar to BSM, but it models options prices. I think quant data breaking things down into the main Greeks like delta and theta delta and Vanna and gamma. Those three main Greeks I think have been very helpful for my trading. Have really transformed the way I look at the stock market or the options market.
I love it. Now, so it hasn't been that long for you in trading, but I know through my experiences of talking to you and running through the mentorship and stuff, I know that you've learned a lot. Like you fast-tracked a lot of things. You hit major milestones in your port. You also took major losses, but those things, they all kind of go into tuition, right? So I want to ask you, throughout your time since Feb, right? What is the one piece of advice, if you could go back in time to tell yourself, what is the one piece of advice that you would tell yourself for coming straight into as a beginner trader?
Yeah, sure. There's a lot of things I wish I had been able to go back in time and tell myself and to do or to not do. But I think one of the main things, and it's a lesson that I've seen repeated again and again ever since I started taking trading seriously with quant data in October this past year, the main thing is control your sizing. There are very few variables in the market that which you can control. And the one thing that precedes all other variables and directly affects the amount of risk you are exposed to in the market is how you size. I would say that's the number one thing I wish I could go back in time and tell myself to be more aware of. It would have saved me from a lot of pain, and especially on the premium collection side of things, when you have to roll, you want to make sure that you are sized in a way that even if you can't roll, it's not the end of the world, because you can't always roll. Rolling is a gift to be able to do sometimes, especially on shorter dated expiries. Sizing.
I love it. So hopefully
size matters in the options market.
Oh, it definitely does, man. It definitely does. So throughout the trade experience then, since Feb, what would you say is your favorite trade structure and why?
Favorite trade structure. All right. Well,
if you only pick one, you have to let's say you have to one trick this trade structure only for the rest of time, what would it be?
Well, I have to say the put credit spread, right? Statistically and historically, the market has always been bullish. Even if there are drawdowns, even if there are bear markets are less frequent than bull markets. If you had just sold puts, even naked puts, and collected at 50% profit, every single, if you did 45 DT or even 0 DT, you would come out on top, even if you have some years where, or some days where you have larger drawdowns. But yeah, put credit spreads all the way.
Yeah, I think it's almost the same answer for me. Put credit spreads is just something that a lot of people don't think about. It is a structure that when we talk about dealers, what are they mainly, right? Short stock, short put, long calls. So in that way, you can already say that if there's short puts, that tells you already that the market generally is going to go upwards, right? And throughout time, we know it. We know the market goes up, right? If we do this, if you continue selling puts at all times and just rolling until you're right, even during this time. market came right back because it just goes up, right? So yeah, that's a really beautiful answer. I really like that. And I know that, recently, we've all suffered a little bit of losses, yourself included, myself included, and I'm sure many people in the chat as well. So I wanted to ask you, since you took that hit, well, actually, how did it happen? That's first of all. What did you learn from it? And how do you think one could prevent that same thing happening to them in the future? And like, how are you going to prevent it from happening in the future for yourself?
Oh yeah, that's a fantastic question. Well, I think I'll start with the lesson that I learned here. It goes back to sizing. So it's already been mentioned. Definitely oversized in my portfolio, and it overexposed me to the risk and of these very, very volatile moves, especially when VIX was in the mid to high 20s. And I would sell, I was in a stage of my trading where I would just sell iron condors daily, right? And I went back and did the math, and I would have come out on top or even break even in most cases if I just had sized better, sized safer. But I think controlling your sizing can get difficult sometimes, especially if you're on a roll for a long time. I think there are many ways to control sizing, whether you just straight up have the discipline to control your entry size, or if you withdraw amounts from the portfolio to limit the tradable amount. There's many ways to go about it, but I think my mistake, and it wasn't even one event. I think that's the hardest. It wasn't one day that just wiped me out. I realized I was slowly bleeding my portfolio out simply because of poor risk management. And if any of you are familiar with the mathematical concept called Shannon's demon, and I think later I can post a link to it if anyone's interested in it, but it basically says that in a zero-sum game, you can still come out on top if you can still make profit if you manage your exposure to volatility. In order to do that, you manage your sizing. Oh yeah, there you go. That's a fantastic. That is the exact page. Yeah. So yeah, I think I realized that because I didn't control my sizing properly, even if I have a 70 to 80% win rate, or through some sprints even better, those losses were just so
astronomical, right?
Astronomical.
Yeah.
Yeah, exactly. Yeah, it would just blow me out of the water, and over time, even though I would go on these sprints of 1 or 2 weeks of just green days, because of poor risk management or poor sizing, I just slowly bled my port out. So for me, it wasn't one day where I just blew my account. Well, I guess you could see it that way, but it's more of a long period of just poor risk management, I think.
Dude, I love it. So kind of figuring out how to size properly, right? I think this kind of leads to this is a comment I saw earlier, but like who actually succeeds in the market? Is it someone with years of experience, years worth of learning about the markets, or someone who understands themselves and how they risk manage themselves? Like, which one of the two actually succeeds? And so that actually, your experience, it goes to the second one. Like, it's someone who has a lot of knowledge about the market doesn't necessarily beat the market. It's someone who understands themselves and the risk management and how they want to manage their portfolios, that's the one that actually beats the market. And so you're living that right now because you've definitely paid your tuition now. I'll say that you fast-tracked a lot of the learning. A lot of the learning. I would say like you at this point in your career, even though it's only been like a year, you have learned like I think years worth of information as compared to like someone else. Like I can talk to a lot of I do talk to a lot of different traders, and some of the things I talk about, even then, like they don't even understand it yet. But if I talk to you about it, and you've only been in the markets for a year, like you already understand it, right? And so you're taking that. You're like accelerating the process of learning how to trade, what the markets are, understanding it. Now you're just on that step of like understanding how to manage yourself. And so
absolutely,
it's beautiful because people. That's why I wanted to bring you on today. Like people don't know enough. They don't know enough about how to manage themselves. They're always trying to shoot for these like. How many challenges have we seen on Twitter and just everywhere? I'm going to start a 1K challenge. I'm going to bring it to 1 million. You all just watch me. And then they get rinsed, right? They get rinsed because every trade they're doing is a full port.
Yeah. It's and the ones who do make it, it really is just a show of luck. They use their lottery ticket, but hey, all this learning that I did, as you always say, as ABJ always says, we yearn to learn so we can earn. And
right.
You have to have that hunger for knowledge, and you have to have that hunger to build experience and to experience the ups and downs. But at the same time, you also have to apply that knowledge correctly. Knowledge is useless in the wrong hands, right? So yeah, it's all important. You can't just look at trading and be like, I'll just do this one thing and I'll succeed. No, it's more than just one activity, right? It's a lot.
Yeah, I think you and I now have both seen people come and go. Over the 6 years of my trading, I've definitely seen people come and go. They'll come in all gung-ho, starry-eyed, looking for the next, looking for trading to buy them a Lamborghini, right? Something like that. And then they just disappear. We never see them again, right? They don't know how to manage themselves and their own emotions when it comes to taking loss, accepting defeat, looking for the next trade. So something I wanted to ask you as well is, so throughout, you've gone through a lot of ups and downs now. Like you've gone through huge win streaks, you've gone through, ripper wins, ripper losses now, and so now I think you've learned a lot about yourself. So what's the best way? Like if you were to talk to someone else, someone who's a beginner, how would you tell them to? What are the things that you would tell them to do after taking a loss?
After taking a loss.
Yeah, after they lose, what should they do?
Yeah, I think if you're a beginner, it's taking a loss. The best way to process taking a loss is journal, right? Or some form of journaling. Maybe you hate writing things down. If you want to record a video or just like have a voice recording, any way for you to just go over the steps that led you from 6:30 a.m. market open to the loss. And then how you process, what emotions you experienced afterwards, what actions you took afterwards, after the loss, everything leading up to and after the loss, you need to go over again, right? Just like in high school or college, when you take an exam and you make a mistake or you fail an exam even, you can't just be like, all right, next exam, I won't do the same thing. That's not how that works. You have to go over, everything's cumulative knowledge, right? Maybe some exams are not, but let's just assume that everything, in trading at least, it's all cumulative knowledge. You can't leave a mistake unattended. You need to go back, go over the mistake, go over why you made the mistake, and then make sure that it doesn't happen again, right? And it sounds easy, but it's hard. It's a long process. And even if you go over a mistake, you might make it again, but that's okay. Each time you go over it, you want to figure out something new. You want to learn something from your mistakes, even if it's a very small thing. That's how you progress in your trading career. you never want to be stagnant or in the same place after making a mistake. You want to be one step further in your path of knowledge or your journey.
Dude, I love it. I love it. I love it. The trading journey is so different for so many people. There's obviously some people who've surpassed expectations, and I think you're like how far you've gone with your trading. I would actually say right now for the record, you're the number one mentee that I've had so far. So that's amazing. That's amazing.
Thank you. And you're the number one mentor I've ever had.
Oh jeez. Oh, just make sure you tell Carmen, man. Make sure you tell Carmen to tell her all the good words, because sometimes she don't believe me. And but yeah, hey, Bryan, thanks for everything. That was the last one I had for you. Do you have any like a final note for people here?
Yeah, I guess these are very exciting and turbulent markets. So good luck to everyone. Happy trading. And thank Apple for all the time that he puts into quant data and thank you to all the developers and Jacob and Boston and everyone who works at the quant data team for making this community possible and making this platform available to all of us to use. Mostly just ending with thanks. I'm very thankful for coming across this community. So yeah. Happy trading, everyone.
Thank you, Bryan. I'm going to go ahead and cut the recording here.